Good morning, folks, and welcome to this morning's video. So this morning I have 4 pairs on watch, and those are Euro CAD, Aussie CAD, dollar Swiss, and dollar yen. So the most likely to provide an entry at this moment in time appears to be Euro CAD. So I'm going to break this down for you now. I'm going to speed run through these to some extent, just because there's quite a lot to get through. But regardless, you can see that we have these highs here on the weekly time frame that we'll likely tap into at some point, especially as we gapped to that high there. It's a good indication. And notice we've gapped there again. We've had the near miss to the area. But what we've also had is we've had this kind of evening star formation. So we have this high here. Okay, we've broken above that and we've pushed the downside. So we had the bullish candle, the kind of stall in price, the high test stroke doji candle, and then the follow through. Okay, so even if price was to take out these highs above, which we keep near missing too, it's likely that we would find our way down to these areas first before pushing up. Okay, and then we'd have that kind of impulse correction continuation, and we'd also have that kind of reversal structure leading into it. Okay, so we could be able to capitalize on a move to the downside, especially when this low here narrowly failed to retest the back end of that. That makes it more likely that there's a zone of orders in this area. Just factoring all these little things in. You can see as well, we have the impulse correction continuations. We have another impulse correction potential continuation. Okay. So as we zoom down, you can see that yesterday I was looking for I didn't have this on watch, but it didn't actually quite meet my entry requirements, but I would have been looking for an entry in here if I had it on watch, but we didn't get what I would have been looking for anyway, so that's fine. But if we analyze this price, you can see here, if we do the pattern separation, so we have this, we tap into that area there. Okay, we come out of all of this, we leave a bit of a footprint. There was a slight footprint above, but we never tapped into that. We tap into there, we leave a little bit of a correction there, we gap to it, tap into that area, move to the downside, we have a correction. It's moving in sequence. Okay, it's moving in the form of a trend. We have a little footprint there, we tap into it, price scoops back up, it comes up in the form of a 1, 2, 3, suggesting the completion of a move. We tap into that and we move to the downside. So what I'm looking for now is just a further continuation of this trend. Okay, you can see here that we have this impulse correction potential continuation. Okay, and if we just measure this, I believe it's just about bang on 50% of the impulse down. Okay, now what I'm just waiting for now is the entry candle. We're in the area now, so I'm just looking for an impulse correction continuation to push lower as per my forecast. And seeing as I can actually see this structure, I can't see the structure on the 4-hour chart, I can see it on the 1 hour, the structure of this, so therefore this renders this a 1 hour entry. So I'll be looking for a 1 hour rejection from this area. You can see that price is in that area now, and it looks like we may get the entry. We'd have about 5% down to the lows. I don't personally think that after we've tapped in, after a completion of a structure like this, and after this much volume building up here, I can't envisage this reversing from this area, because typically speaking, we wouldn't build this much volume just above. And if we just measure this here, that takes us to the break, and if we measured it from the break, there should be enough volume in there to take us a lot lower. So I've set a or I'm going to set a Google Calendar reminder. I think I've already done so on this one, just to remind me to check this as near the hourly close. But that is Euro CAD, and I'll be targeting these lows down here. Okay, we have the gaps there, the near misses, so I'll be targeting that low there, setting my take profit at 90% of the range, and then trailing my stops and trying to benefit if we do break the structure. Okay, trying to benefit off of all of this volume here. So if we do break it, it's likely that we will start pushing a lot lower because of how much volume's been built up here, which is kind of if you think of it as the pulling back of the bow and arrow. Okay, this volume will likely help this to go a lot further. go a lot further. I don't know if you heard all that because I got cut out. There's alerts going off all over the place. I don't know what that is. Can't actually see it. Was that pound Aussie? Pound Aussie, right. Okay, we'll move that off the chart for a second. Aussie CAD doing what I was anticipating. So if we just zoom out. So Aussie CAD on the higher time frames, you can see that we have broken below and broken back above here, suggesting a washout of liquidity there. And in the longer term, we could be seeing an impulse correction continuation to push higher. However, and especially when we have the gaps there, the gap to that low, okay, we may tap into these lows first before seeing that. However, what we seem to be doing at the minute is we have a kind of reversal structure here leading into the retest of the back end of all of this. So there likely was a zone of orders here in this area, especially if people believe this is now resistance, okay, the support and resistance traders. We've likely tapped out a lot of liquidity there, okay, by retesting the back of that in the form of a reversal structure. So I was anticipating exactly what appears to be happening now, okay. We appear to be getting that momentum that I was envisaging, okay. Just zoom out, yeah. Okay, so what I'm going to be looking for in this instance is I'm going to be looking for the push down, which we seem to be getting now. And in a minute, I'm going to set a Google Calendar reminder to remind me to check this in an hour's time, because I'm going to be looking for a 15-minute continuation. Okay, I'm going to be looking for a 15-minute continuation. So 6 to 8 corrective 15-minute candles if we break below this area of value as I've annotated here. Okay, so I will set a Google Calendar reminder to remind me to check this in an hour's time, because that will mean that potentially a minimum of 4 of those candles, if we kind of close down here, will have formed. So we may be half an hour away from an entry as a minimum, but it could take a lot longer. We don't know, but I'm just going to check this periodically to see what happens, to see if we get that. And then I will be targeting these lows down here, these near misses, which we will likely tap into, because there's likely a zone of orders here because of the fact that we have a lot of near misses. Okay, so as people get long, there's likely a zone of orders down there. But we shall see. We shall see what happens. So that's another one I've got to set a reminder on in a minute when I finish this video. Dollar Swiss. Okay, dollar Swiss, if we zoom out. So dollar Swiss, you can see we've broken below here. And look at the weekly close we had, this weekly close, okay? This looks like a washout candle. Although we're still trading below here, this is the sort of candle that we would typically see if we're going to move to the upside, but we don't always move to the upside straight away. Okay, this could be an impulse correction continuation to push lower down to here, but from a macroeconomic point of view, that I'm not so convinced of that at this moment in time. If we just zoom in, you can see we have an impulse correction continuation. So this could just be actually volume accumulation to push higher, okay? Just the orders being collected down here. Another thing that it could be is if we just look at this, something I observed last night when I was doing this. This correction is very wide relative to the impulse up which has preceded it, which means we could get an M-style pattern or an inverse M-style pattern where we drop out because essentially a lot of the buyers get bored and then it bails out, it ends up like that, and then we tap into that and move to the upside. Another thing it could be, which is why it's so wide, is this could actually be the middle section within a structure like this, because if you look here, this high, well, actually there's a slight gap here to this high, but there's also a gap here to the retest of this. Okay, there was a sharp move here, a very sharp move, implying there may be liquidity there, and the fact that we've gapped to it is giving me an impression that this could still be a move to the downside longer term. Okay, how far remains to be seen. But this could just be the middle section where we tap into that, move to the upside, complete this structure, retest that sharp move where the liquidity likely is, and then push to the downside from there. So even in this run here, we could capitalize on some potential long plays, especially because we have a gap to there and a gap to the retest to the back end of that. So there's likely a zone of orders here. So if we tap into this area and push up, Okay, I won't be looking for a risk entry from the bottom just because of how wide this is relative to the move up which has preceded it, and because we're still trading below the higher time frame low which I showed you. Okay, but if we push up and we flag, there's likely a zone of orders here that we'll tap into before we start pushing down to do that, if that's actually going to occur, right? So you can see the clues again. We have a slight gap to that low. So the base of all of this consolidation is there, the start of it. We have a gap to these lows again. We gap to it again, and we appear to be coming back down. This could just come up like that and then still come down. And if it does, that won't be ready by the end of the day. But what I'm going to be looking for from this pair is the following. I'm looking for a tap into this area, followed by a push up. And in this instance, I would be happy to take a 5-minute flag. If we push up, I think that would be more than deliberate enough. And then I would look to target. We have the start of this structure here. Okay, so the start of that is there. So that would be about 3%. And then up to that near miss there, which is where I'd target, we'd have about 7% to work with. So I have an alert set just above the area of value. If it doesn't trigger, then I don't need to check this pair. So next up is dollar yen. So dollar yen, right, if we just zoom out. So initially, I was anticipating a potential. So we had this low here that we near missed to, but we tapped into a sharp move here where there was enough of an exchange of liquidity last time around to cause price to rally to the upside without any significant pullbacks until all the way up into kind of these areas, right? So, and we did actually push up from there. We had the impulse correction continuation. However, price has given us a message from the market. Okay, and you can see that we tapped into the retest of the back end of this, and we pushed down with aggression, suggesting that there was not enough liquidity here to send price to the upside longer term, and that we're actually coming back down to potentially take out this low, which this low near missed too. So there's likely a zone of orders down there. Okay. And we also have a 1, 2, 3 leg suggesting a completion. I said if there's a completion of a move, either we then need to build volume to push higher, or the completion of the move suggests that we're just going to tap into something and then move down with aggression. Well, at the moment, you can see that we have that kind of confirmed evening star formation going on. And if we just look down, you can't see it so much in the 4-hour chart. What I also like about this is we almost have a failed buy move here as well. And when we have these failed moves in one particular direction, the move in the other direction tends to be quite aggressive. So we moved down, price retested the back end of all of this volume, and it failed to commit, okay? And we've corrected underneath this low hit, this high here, okay? So that gives me a clue that failed buy move is also an indication to me that we could be capitalizing on a short. Another thing that ties into that is that we have this little hook point here, okay? So there was enough of an exchange of liquidity here to cause price to smash through all of this volume here, okay? Which is suggesting to me that, we've taken out a lot of liquidity there. And sure enough, it was a bit of a corrective move down. But if we just separate these structures, we have a little reversal structure there. Okay. We move to the downside. We leave a footprint. We tap into the footprint and move to the downside. We have this little correction there. Okay. And we move to the downside. Price doesn't break this low impulsively. Instead, it moves up. And it noticed that it's gapped to where this volume likely is, okay? It's gapped to it again. This is giving me a clue that this, if you think about it, people are getting short here, whilst there's still orders up here. They're likely putting their stop losses above here, a lot of them, okay? So if we push up, let's get that off the chart a minute. Why is there two forecasts? This TradingView's doing some very strange things today. Not quite sure what's going on with TradingView, but why it's done that. Hold on a minute. Let's get this off the chart. We've got two of these on the screen. Right, there we go. So let's just save that before it tries to do that again. So if we get this 1 hour structure, so if we zoom out to the 4-hour chart, can't really see this structure there. I can see it on the 1-hour chart, so therefore this is a 1-hour structure. If we push up into these areas, okay, I would consider getting short here, even if we only tapped into here, because I could put my stop loss above here, okay, to mitigate the chance of a, what's it doing now? To mitigate the chance of a, tag in, tag out, and it does that and then drops. But I think in all likelihood, we'll likely tap into this area now. I wouldn't be surprised if we spike above, spike back down, and then I'll be looking to get short with a 1-hour entry, and then I would be able to manage this down to the lows for something in the region of 3.5. And then what I would do is I would target this low, set a take profit there, because if we measure this range, the 90% area of the start of this, so we have this structure here, okay, and the base of all of this structure was there, and it just so happens that from there, the area of value we tapped into to this low, this is the 90% area, which is where price can often pull back deeply to around 50%, even if it's going to drop. So rather than sit through that potentially, I would set the take profit there whilst trailing my stops. And if we actually just measured this whole impulse, okay, this from top to bottom to the bottom of the correction, and we measured it from the break, what do you know? It lines up almost perfectly with that area as well. So that would be the completion of the impulse correction continuation, where price would likely need to build more volume, even if it was going to continue in the forecasted direction. So that is my forecast today, folks. It's not necessarily what I think will happen. It's what I'm looking for and what I will do if the market does what I'm anticipating it might do. Okay, big difference. Anyway, have a great rest of your day, folks, and I'll see you again in the next video.